Housing in a positive direction, seemingly. Foreclosure filings falling to a 5-year low. Diana Olick has the details in today's Realty Check. Diana?
Well, Bill, it is good news, but it's also a warning to investors buying foreclosed properties. It may be time to shift markets for the best deals. Foreclosures are dropping dramatically in some states, but rising in others. Take a look if you will. Foreclosure filings in Q3 are way down in California, Arizona, Michigan, and Georgia. These are states where foreclosures don't need to go before a judge, so they've been moving very quickly, and investors have been inhaling the properties, pushing prices higher. Buying into this price recovery, not the best way to profit, folks, right? But on the flip side, you're going to get better deals and bigger profit now in states that are seeing foreclosure spikes, states where you need the judge and where huge backlogs are now finally moving. New York, New Jersey, Florida, Illinois seeing double and triple digit jumps in foreclosure activity. Investors will find more supply there at lower prices. Now, investor demand has driven supplies on the low end out west down dramatically. Zillow reporting today that supplies of the cheapest California homes down 43%. That's squeezing those much needed first-time home buyers right out of the market. And all that foreclosure data from Realty Track. Michelle?
All right, thank you so much, Diana. So, based on all those numbers, are things looking up in the housing market?
Two guests on that. Frances Katzen, Managing Director and Executive Vice President at Prudential Douglas Elliman. She views this as just one more sign of a housing recovery. But then there's Shari Olefson, who's a real estate attorney, director of the Carnegie Group think tank. She thinks the housing market will still bump along for the bottom for some time to come. Shari, why?
Well, if you look at the 50,000 foot view, you take a step back. We've got states like California where, sure, foreclosures are down 45%, but they're still one of the top states for foreclosure. I mean, if my kid brought home a 0 on her math test and then got her grade up 45%, she's still failing. So that's not reason number one. Reason number two is in most of the judicial states, the foreclosures are actually up. Here in Florida, foreclosures are up by 24%, 11 months in a row of increased foreclosures. And we're seeing similar problems with the price trends. Prices are bumping along the bottom, which can be worse in the long run than sharp drops. Historically, we're still really far away from where those price trends should be.
You see it the other way, don't you? Why?
I do. I think that the third and fourth quarter last year was obviously a standstill. We saw a lot of little movement happening. And then what we saw is that the U.S. economy overall was actually not really doing so well in the stock market, unless you were an Apple. And at the end of the day, we saw people really not sure what was going to happen in terms of whether they were going to get a pay increase on Wall Street, if they were going to get paid at all. And what we saw in the first and second quarter of this year was a huge shift. We saw people seeing pent-up demand because they wanted to diversify their portfolio. They wanted to see their money work for them, and the stock market was not yielding more than 3% on average. And what we wanted to see, and what most people were hoping for, was to see some money make their money work for them. And what we landed up seeing was people diversifying and buying property in the first and second quarter, absolutely taking advantage of the past 2 years. Property had come down somewhat. So what we saw is,
do you see people getting pushed into the market because of low interest rates? I mean, that was Bernanke's intention.
Right.
No, and that's really reflective of the investors.
The first and second quarter of this year, we saw lack of supply, pent-up demand, and people actually finding that they were yielding on their investments.
But that's from investors. There are two factors that are going to impact whether average Americans, because again, average Americans actually have very little money directly invested in the stock market.
Average
Americans are going to buy if they're not afraid of negative equity, and we still have 25% of those folks with a mortgage who are underwater. And if they're better off from an employment and wage standpoint. We still have huge unemployment numbers, and even more importantly, what's not reflected in those numbers is underemployment. The average American family is
We'll let you two talk to each other during the break. Fran and Shari, see you later. Thank you.